Hi everyone, hope you're all doing well, and I'm sure you could have guessed there was going to be a video today after what happened with Boohoo, doing a bit of an update on my thoughts on it. Am I buying? Is it a buy at the moment? What's my opinion on it? Everything like that. So we're going to get stuck into it. First of all, it's very rare that I actually use the t-shirt that I use in the thumbnails all the time, but the reason why is I've sold all my other t-shirts to go buy some more Boohoo shares, so that's why that's happening today. But anyway, getting back onto a serious point, talking about Boohoo, doing a bit of a stock update on this one and what my thoughts are. First of all, I'm going to say this from just an investing point of view. I've got to say, there's part of me enjoying this dip. There's a part of me looking at the stock market and going, it is actually really good to see the stock market getting back to a bit of normality where stocks don't just go up, where stocks go down, where stocks make some very good buying opportunities out there. And it is really interesting to see the reaction out there for a lot of people that might be the first time witnessing a dip like this, the first time seeing a stock that you really like lose over half its value. And it's very interesting to see the reactions of people that are frustrated on that, people that are frustrated on the opportunity to see a stock that could be a really good investment go down. And it's just the reaction in general to a stock that moves down. And for me, depending on what situation you are, if you are someone that potentially bought a stock and then that stock goes down, then you might be really angry on it. But if you're someone that maybe likes a stock that goes down and loses half its value, why are you angry that it's going down? Maybe this is a great opportunity. If you've just got a stock that you think will be going to a certain value in a few years' time and you get that opportunity to buy that stock a lot cheaper and you're going to make more money, those are opportunities you love as a long-term investor. And if you're a long-term investor looking at Boohoo right now, you might be looking at a stock that was free, nearly £4 at the start of the year, down at going nearly below £1. This could be a really good opportunity. And when you look at that point of view, is that it could be an amazing opportunity. This might be one that's worth looking at buying. So we're going to talk about it from this point of view today. Is this an opportunity to buy if you're a long-term investor? If you look at Boohoo, are you looking at Boohoo now with a massive discount on that share price going, this is an amazing opportunity as a long-term investor? So that's what we're going to do today. We're going to take a look at Boohoo and my thoughts on it. So let's get started. So Boohoo share price today has absolutely crashed a huge amount. It's down 23%. And initially the stock actually dropped, and then I thought, okay, a few people are buying up this dip. And then as the day has gone on, there's been slowly more and more sellers selling out of this one. And yeah, it's down to the £1.06. I cannot believe it. I cannot believe I'm actually saying that price. And we are nearly going below £1, which is absolutely bonkers. Now you can see that actually means that Boohoo is now currently a 1.3 billion market cap company, currently trading, and I don't know if this is exactly correct now, but it's currently, as according to Google, at 22 times earnings. Now let's zoom out of Boohoo's stock chart. Now as you can see here, this is the drop. So we went into 2021 and you can see the stock was really, £3.65, here £3.57, and since then the stock has lost an absolutely huge amount and fallen off a cliff. 70%. The stock is down 70% in under a year. So you're looking at that share price drop now and you are maybe looking at this one going, is this a really big overreaction? Is this a buying opportunity? Or is this a company that's dropped 70% and you think, okay, this is actually a problem with this company. The reason why this company has lost 70% of its value in one year is because it's a terrible company. The company is going to be pretty much on the road to bankruptcy in a few years, with a massive drop like that. You're potentially looking at a company that's nearly gone from a 3 billion valuation all the way down to a 1.3 billion valuation, and a massive drop. Now for me as a shareholder, I originally started getting involved in Boohoo around this dip here, around March 2020. I actually bought the stock and the stock just zoomed up within a 2-month period, and I actually sold the stock out at a 80% gain. Since then, the stock actually then fell off a cliff again. Bought it, sold a bit of position, went back down, bought it again, went up again, sold a bit of my position, and then just basically been holding. And then eventually the stock has recently just kept going down and down. And personally for me, I've been buying a bit more of this stock. Now, my probably game plan with this one is to do something very similar with this, where I think that these little drops here were massive overreactions, and I'm looking at this one again thinking one of these drops is massive overreactions, and without doubt I probably will trim some of my position once it gets back up to that £2 to £3 range, as I do think even in the short term this is quite a sold off company. But my plan is actually as well to hold this for the longer term of 3, 4, 5 years, which I previously had the plan here, but obviously we've gone a bit lower. So right now at these stock prices, I am obviously still bullish on this company. I am still a buyer, and I am looking at this company going, I do think that this is a stock that personally for me, and I'll talk about that in a second, that I believe should be a £3 stock. And potentially in the longer term, I think this is a £5 plus stock. So there's part of me that are buying this at £1 thinking, okay, I've got an easy 200% upside from here. But as well as that, I am looking at this from what I would normally do, which is a 3 to 5 year hold, and thinking that I can even see this going up to a £5 stock. So right now, when you start talking about that, that's a 5x return from here, which is, when you look at that, is absolutely amazing. And I will talk about why I believe that is in a little bit. But just to put that into context of how big of a drop this is at £1.6, this is below CV lows. I mean, look at that. It's actually 41% down on CV lows. The time when the peak pandemic, and it's actually lower than that. And if we were to go back to where the last point it was this low, we have to go to a long period of time. We have to go wipe off many years. Oh my, I'm actually going to have to zoom out even longer after the IPO. Hold on, I didn't even realise it had gone this far. We are actually, here we go. The last time we were at these stock prices was the 30th of September 2016. So we have had pretty much prices go back to where we were at 5 years ago. And there hasn't been that much share dilution as well with this company. So yeah, that kind of puts it into context how low this is. So you're probably looking at that thinking, well, if we're back at 30th of September 2016 prices, this company must have something major going wrong with that. And that's what we're going to have a look at today. Now, Boohoo itself is a company which was founded in 2006. Originally, Boohoo was aimed at 16 to 30-year-olds, and it is a fashion clothing brand with 36,000 products, and it owns its own products as well, which is really important. Now, since that time of just having the Boohoo brand, what it has done is it has acquired massive amounts of extra brands. So it's gone from just being basically, the one brand company now to having a lot of major brands. One of the major brands that stand out is this, which is Pretty Little Thing, or PLT. This is a brand that they have fully owned since last year now, which is a massive brand, and I think that alone is worth a lot of money. And the other brands is Burton, Debenhams, Dorothy Perkins, Warehouse, Oasis. There's a lot of brands that they own now. And what that has enabled them to do recently is go from being a brand that is only targeted at 16 to 30-year-olds to basically now from 16 to 70 plus, cover every age range basically, which is absolutely amazing. And one of the big buyouts that has enabled them to do that is their recent acquisition of Debenhams. So they managed to buy Debenhams a while ago. So what Boohoo did is they bought Debenhams because they were struggling after all the CV times. I thought paid a really good amount for them, which was 55 million, and basically they shut all of their stores, which since then they have actually opened one store in Manchester, but they did shut all their stores and turn it to an online brand, which I think for 55 million for what Debenhams will bring, the branding awareness, was a really good purchase. Now, if we do go back to the RNS of Debenhams, what it will do, and the thing is to remember is Debenhams isn't really showing in the financials. They've only just relaunched Debenhams right now. Is what Debenhams will do is they're going to expand into beauty now. So what Boohoo has typically been is that brand that was 16 to 30-year-olds and targeted there, is you open up now from 16 to 70 plus, a massive age range now. And as well as Debenhams, as well as being a clothing brand, you now have beauty. So what they're going to do is they're going to go to the 1.4 million members of its beauty club. So it's going to have beauty sales coming in now as well. So it now has two different income streams. It has that fashion, it has that beauty, and as well as that, it's opening up its awareness to the target audience, which is a massive. And that Debenhams deal, which previously generated revenues of roughly 400 million in its last full year, will be relaunched on Boohoo's tech platform between March and May, and will continue to wind down alongside the department stores for an unstated agreed period. So what will happen now is we've seen the just slow process of that happening, and Boohoo relaunching Debenhams online. And this is the thing, you now have, this is yet to come into Boohoo, where you have that beauty range, as well as the beauty range, that brand, the new age range it opens up. And you have a company here which previously did 40 million in its last year. Now obviously a lot of that will be from physical stores, so you never know, it might gain a bit more from being online only, it might lose a bit of money, but you now have a company which you paid 50 million for, which it was able to do easily because it has an amazing balance sheet, that potentially could add 40 million in the next few years to Boohoo already. So this is one major acquisition which would be massive in the next few years for where Debenhams are going to go. So you probably look at the share price now and going, well, why has it gone from £3.60 all the way down to £1.06 in this last year really? There's been a lot of progress made with the company's future in the last kind of 12 months. So why has the share price gone down? Well, a lot of it has to do with a lot of recent updates. Really, the share price dipping in this sort of period, there wasn't really much justification for it. But since we have got to July time, there has been a bit of justification for that share price drop. How much it deserves to drop is up for debate, and that's potentially why I'm buying it, because I look at that and think the drop at the moment is a bit of an overreaction, but a lot of it has to do with a lot of the updates that they brought out recently. Now today, especially the big drop on why we have a big sell-off in the share price was to do with this trading update. So basically what they did come out and say that however expectations for the financial year ending 28th of February 2022 will be lower than previously guided. So you have them coming out and basically saying that financials are not going to be in line with what we expected. So obviously people are like, oh, well, that's not great. So that's basically caused a bit of sell-off in the company. They say that there has been significantly higher return rates, so I would guess that is because of still restrictions out there, or restrictions increased and people potentially ordering stuff and then potentially not going out, or people thinking, oh, I'm going to have a busy Christmas period and then cancelling a couple of events because of what's going on. So the return higher rates has caused a few problems, and that's probably to do with a lot of the people going back out and going to do stuff and then potentially not following through. So you can see that happening. And there was continued disruption to our international delivery proposition, impacting international demand and significant ongoing pandemic related cost inflation. So basically you had two things here where they said that they are not able to get orders out as quick, so they think they're losing service because they can't get orders out quick, especially internationally. And because what you probably will see is a lot of companies that sell physical products at the moment, a lot of them are reporting on a lot of logistic delays, so they're taking longer, which would match with this. And also logistic costs have pretty much tripled in the last year, which would then pretty much sum up what is going on here with the cost inflation. Now, if you do pop down to this chart here, you'll see what it looks like over the last 3 months. You can see here that there has been a 10% change in here. So the big thing is here, you'd be looking at the share price thinking, oh, if you look at the share price here, you'd think, oh, the company's probably struggling for growth. If your share price has gone down 70% in a year, you're probably thinking, oh, this company's probably then, they've lost a lot of revenue. The company is struggling from that point of view. Well, if we just have a flick across here to what the actual sales are, the company is clearly not struggling for revenue. They've actually moved in the right direction still. So even with a lot of these problems going on here, they're still moving in the right direction. And the big thing to remember is they've gone on off really hard comps as well. If we go actually on a 2-year change, the group total sales are actually still up 53%, because you've got to remember there was a lot of demand pulled forward because of the pandemic. Now, if you take that into perspective, Boohoo historically grows around 30%. We are still pretty much near our historic growth number here. So even though the share price would look like 70% drop off, the sales are actually still moving in the right direction. Granted, not as strong as what we hoped, but considering that they're still moving in the right direction, it's still a positive, and you've got a way up. Does a 70% drop on the valuation, even though sales are still moving in the right direction, justified? Now, when you dig into the number, UK sales are still massively strong here. Why the UK sales is especially strong? Well, we haven't had too many of restrictions, and the big thing is a lot of the products are made in the UK, so you don't have to have a lot of logistic issues and supply chain issues. Now, when your products are made in the UK, then that makes a problem for when you're in other countries. So as you can see here, rest of Europe, you can see that we are still up, but we are moving in the wrong direction. Makes sense. There's a lot more restrictions over there. As well as a lot more restrictions over there, you've got the logistic issues. USA, same again. It's down. Still up a strong amount though. They're still up a strong amount, but it's down. So the rest of the world is down as well. So you can see here that the UK side of it is going absolutely fantastic and is still pretty strong. The big problem that you have here is what's going on outside of the world, and that's when you consider logistic problems, getting the products out, meeting demand, a lot more restrictions over there, a lot tighter restrictions. You can see why that demand's dropped off. And you can see here that on the guidance and outlook, they can see net sales growth to be 12 to 14% compared to the previous of 20 to 25%. So that's a bit of a chunk of a decrease in the growth side of it. Let's not forget, that's still positive and moving in the right direction. So that's still very good, just not as good as what we hoped. And the other thing is that this is reflecting that we still have January and February where we still have the returns, and a lot of the demand because of the variant could create a lot of uncertainty. So this is pretty much, I think, factoring in the worst case scenario here, which is good to go, just go straight out and go, yeah, worst case scenario, rather than having to come out and say something negative again. And adjusted EBITDA will be down as well compared to what was previous, because obviously when your sales are down, you make less profit, and if you're making less profit, and a lot of that profit is being, you're having to pay more, cost of return. Your products to, send to the rest of the world are costing more as well. Your margins are going to be down slightly on this. But they did come out and say that they are still hoping to do 5 billion of net sales and returning normalised growth rates to 25% per annum. And they also wanted their medium-term targets for guidance to be 10% adjusted EBITDA. So let's put that into context. You can see here that they are currently looking to do about 2 billion in revenue, and also you can see here that their profit is going to dip slightly because of what's happening this year. Now the big thing to do is look at a long-term basis rather than a short-term basis. You look at the long-term basis here and look how good this company has a history of delivering. Look at the revenue growth, look at the profit growth. The revenue has always moved in the right direction, growing around that 30% rate, and also that means that the earnings have also moved in the right direction as well. So the big thing is when we look back here and we go back to the point of view that the share price is now down at the £1 range, and we've not seen these prices basically since, I've got to go even further out. We've not really seen these prices since 2016. Let's just look at the progress the company has made since 2016. So if I go back to the end of the year here, so they were doing 263 million, 21 million in earnings. So since then we are now pretty much nearly 10 times the actual revenue, and earnings as well has pretty much tripled. So the profits moved in the right direction, the revenues moved in the right direction, and going forward you've got to look at what you think the company will do. Now for me personally, I look at a lot of these issues that were here. I think a lot of these issues are short term. I think eventually people will go back to going out a lot more. I think that a lot of the shipping costs will be resolved, whether it is shipping faster, the costs come down, or Boohoo put the prices up. For me, I look at a lot of these issues that are in the earnings report, and I think a lot of these problems that are in the earnings report are short-term issues. I think these are short-term issues that will be resolved in the next 12 months. So for me, when I look at this share price drop, I look at that share price drop and go, okay, there's some issues here that have caused some problems for the company going forward, and it has hurt the financials slightly. But as a long-term investor, when I look at this company not for what it's going to be in 1 month time, 2 month time, 6 months time, when I look at this company in the next kind of 2, 3, 4, 5 years, I might now looking at a company that's down 70% at a £1 range, thinking, what is going to happen to Boohoo? Are they going to increase is their revenue going to go down? Is their profit going to go down? If I'm thinking that's going to happen, then I don't buy this stock. But if I look at Boohoo and think, okay, I think they're still going to be okay. I think revenue will still grow at 20%. As the revenue grows at 20% plus, that means more money will go down to earnings. I think earnings will be resolved. I think they will go back to not having as many problems with the logistics side of it, and that will mean more earnings. And if you think this company is not going to do that, you don't buy it. But for me, I think they are going to be okay. I think they will go back to, as they have done historically, growing that revenue, growing the profit. As they carry on doing that, I think the share price will be rewarded. And I think this company will get to the point where they will do 100 million in profit, and they will do that through either the logistics problem sorting itself out, or as well as that, the revenue increasing. Now, if you put about 100 million profit on this company right now, that will mean that this company is currently trading down 13 times earnings, which is so crazy. So crazy. You don't normally get a company that has this sort of history of growing this fast, putting this profit in, down at these sort of valuations, which is what I'm absolutely loving here. Now, in a valuation from Simply Wall Street's point of view, they actually have this company down as 62% undervalued. If we look at the company here, you can see that they have a very healthy balance sheet, There's only 10% debt to equity here. They are currently sitting on a really good cash balance. The debt is not much really at all. So very healthy on the balance sheet point of view. And when we do look at the ownership, what do you want to see when the shares are going down? A lot of insider buying recently. And as well as that, we do have a founder-led company here, which is also the chairman of the board and currently owning a 16% stake. Now, I know a few people have said they would love it for a bit more insider buying, but hey, that's their point of view. We've still got plenty here. And you got to remember, a lot of people did buy a lot of shares last year when it did go down. So I wouldn't get too upset if these are loads of insider share buying. But what you do have here is you have hardly any selling. And a lot of buying going on, so that is really positive as well. And this is Boohoo from a price to sales point of view, and look at this from 2017, was trading at 4.52 the price to sales ratio, currently down at 0.73, which is crazy from a sales point of view, actually below the market cap value for a company that grows this fast. If you look at the total enterprise value to EBITDA, you can see that this is at 41 and we are now currently down at 7. Obviously that will be adjusted for the logistic issues and everything like that, but you got to remember that I think this will be resolved in the next 12 months, which is the big thing. So that is very low as well. And if you have a look at the normalized earnings or the P ratio, 67 all the way down at 12. Like I said previously, this won't be adjusted because of the logistic costs, but this is what I think you got to plan out. I think that they will, if we go back to the Boohoo point of view, and if we do go on the growth side of it, you can see here that they did do previously on the profit 63 million, 79 million, 90 million, and you can see this little drop off here that we are going to have in profit down to 59 million. I think that's going to be resolved. Now, analysts at the moment will predict that by 2023, this will go up to 115 million. I think that they will get to 100 million. I don't know if it will be in 12 months' time. If it does happen in 12 months' time, there's no way I see Boohoo at this sort of share price. Because like I said, it'll be like 12, 13 times earnings, which is just absolutely nuts. But I think they will get to 100 million within the next kind of 2 or 3 years. Now, when Boohoo does get back to doing them, if it does carry on growing, the next 2 years, 20% revenue rate, it does go back to putting in 100 million profit. In my opinion, there's no way I see Boohoo at these prices. There's no way I see it here. I see Boohoo being at least £3. I can argue by that sort of point of view, Boohoo can go all the way up to £5. Now, when you do look at that sort of point of view, at £1.6, for me, I look at this and think this company is, obviously then you're going to make a good 2 to 3x on your money. You start talking about a £5 stock, you're talking about a 4 to 5x on your money. And like I said earlier, this is a fantastic company. The growth that you have here is very, very good. You have a company that is making good profit, good insider ownership, very healthy. And the big thing as well is that you're getting in this company now on a 70+% correction. And if you do believe in the company, then obviously this is a big screaming buying opportunity if you believe they can deliver on that. So that's my thoughts on Boohoo going forward. Obviously I'm bullish on where they're going to go, where they add in that dividends acquisition, and I think as well, you look at the company, sure, it's a little bit rough on what is happening at the moment with the variant news, the logistic problems that they do have. I think a lot of it is temporary over the next kind of 12 months, and still the company is still moving in positively in the right direction. In the next 12 months, if you ask me, I think a lot of them problems will probably sort itself out through either naturally through a lot of the logistics coming down in prices, or Boohoo put them prices up and that solves that problem. As well as that, I do think that Boohoo will still continue to grow at least 20% in revenue rates. That will also add into the profit. And when I do consider that happens, I can only see this being easily a £3 stock going forward, and potentially all the way up to a £5. And even longer term than that, if I start going 5 years down the line, I think this stock, you could be talking £8+ for that. But I won't get too far ahead of that just yet. But for me, it's one of those that if you are a long-term investor and you actually do hold stocks for the next kind of 2, 3, 4, 5 years, and you actually start planning out where the company's going to go, where you plan the financials are going to go, these are the opportunities that you love. These are the opportunities that you look at and think, I have this company that sold off this much. Is this a company that I can make money on the next kind of 2 to 3 years? There's a few people that will look at that stock today and they will have no plan. They will not understand why they invested into it. They will have no belief of where the company will be in the long term, and those people will be looking at that stock today and they will be panic selling out of the stock. And those are the people that won't be very successful in the stock market. But if you do believe in the stock and you look at the dip that the company has lost this much value, that for some people will be an overreaction and maybe a good buying opportunity. For me personally, I look at the stock down at these top prices. Obviously, as you can tell, I am going to be buying this stock. I do believe that this stock is easily a £3 stock. So I am already looking at that thinking there's major upside. And then I actually start planning about where I would hold the majority of my shares in the next longer term. And I believe that will bring me a bit of decent money in the share price. So yeah, that's my thoughts on Boohoo at the moment. Obviously, still a massive believer. And while I get these opportunity at these top prices, I will load the boat. And that's what I will say on that. So hope you enjoyed it. I'll see you all in a bit.